haven't had an angel cake in yonks. This isn't all mine, though, no?
No.
Lovely.
Not right now. So it's for later on, because today we're talking all around different forms of investing and what that process looks like. So we're going to go through a few different layers.
So is this linking to angel investment?
Angel investment and other forms of funding as well.
Very smart. Shall we get into it?
Let's do it.
All right, hello, my friends, and welcome to Working Lunch, the show where we take on the challenges of small business owners. And this week, it's a tasty one. We're talking funding. Joining us is an investment expert who blends serious financial know-how with a passion for helping others feel confident about money. It's Luize Silina from Future Planet Capital. Welcome, Luize.
Thank you for having me.
So, Will, you've spotted the angel cake.
I certainly
We
have.
know you're a fan. So throughout the episode, we're going to get you to make your own and add layers onto the existing angel cake as we go through that investment.
I'm not baking, though. They're coming. The layers are coming out.
The layers are coming.
I can
You're
assemble some
assembling.
layers. Perfect.
Yeah. So before we get building, Luize, please could you tell us a little bit more around what is angel investing and the equity journey?
So when we say equity journey, what we mean is that the company is ready to raise equity. And typically it starts when the founders go and speak with angels to raise angel investment. And angels typically are wealthy individuals, high net worth individuals who have money, and they are happy to take high risk and invest in the startup, right? But then the next step in equity journey is actually going to institutional investors like venture capitalists who write bigger checks and who share more credibility. They can open more doors, and that unlocks that next stage of growth.
Brilliant. A bit similar to layering your cake.
It sounds good. I like how you've laid this out. I like the step-by-step process. I'm looking to my left. I'm seeing getting investment ready. How could a business know when they're ready to start raising investment?
It really depends on what stage we're talking about. Angels, who are the first investors, they are looking at early signals, early customers, pilots, minimum viable product in the market, but they still want to see that there is a problem and you have a solution how to solve it, right? And then obviously the next stage, as you grow and maybe you approach venture capitalists, they will look at different signals. So they already want to see that traction in the market. So the product already has to be working. And again, they will write larger checks to then unlock that next stage of growth. But overall, what we are as investors looking for is the problem, the solution, the market. How are you approaching that? And who's doing that?
Okay, right, I'm going to lock in my base layer.
Layer it on.
Yeah. What you saying? Where?
Touching on that valuation then, Luize, please could you just talk us through working out how much you need to raise and how do you make that realistic valuation?
So what we typically see is that founders should raise for at least 12 to 18 months of runway, right? So that they have enough funding to fund that next stage. And to do that, you need to have clear objectives, clear milestones. So if you map the milestones, right, you know how much funding you need to get to the next point.
Yeah.
And having that clarity is exactly what investors are looking for. And in terms of the valuation, it's quite tricky at the early stage, right? Because there's not that much maybe traction, that many signal points. But what we typically see, founders need to explore what's happening in the market in a similar sector, geography, what are other companies raising and what kind of valuation. All of that adds up. And when you think about valuation, that should help you to get to that number.
So that moves us on to very slowly and carefully, finding the right investors. Where would you say you normally find angel investors?
I think to answer this question, you actually need to take a step back and think about what kind of investor I want to have, you know? So if you know the answer to that question, who you're looking for, what kind of qualities, what the investors are doing, what kind of portfolio they have, how they can benefit your business, then where do you find them actually? The answer to that question is actually quite easy, right? We have angel networks across the country, so it's easy to find those connections, and it's more about looking for them. You will most likely find those people.
And do you think that that investor should be in the same industry or sector as a founder?
I think the best approach actually is to have a mix.
Yeah.
So it is good to have an investor on your cap table who have industry experience. But on the other hand, you know, look at generalists, people who invest across various different sectors. That's also beneficial because their connections are very diverse,
Yeah,
right?
and if the business wants to pivot, they can move into a different industry.
Exactly.
using
So
that.
they bring different perspective. And therefore I said, I think obviously it depends on what founders want, but it's good to have that mix, I would say.
Yeah, definitely.
Before we add our next layer, we do have to introduce a bit of a challenge we have here on Working Lunch, okay?
Ooh,
So it's now not just
exciting.
me doing the challenges. You ready?
Ready?
Want more on equity funding? Remember, preparation matters and we can help. Our Eagle Labs Entrepreneur Academy features a dedicated raising capital course to help you decide which funding option could be best for you. We also offer specialist mentoring and coaching, real experts who can help you pressure test your plan. And finally, our demo directory connects ambitious founders with investors and corporates, giving you visibility when it matters most. Now, back to the table.
Luize, welcome to Bittersweet. So inside here, right, we have 2 strawberries. So in a minute, we're going to ask you to pick one of these, right? And depending on which one you get, we're going to ask you to share an anecdote with us about funding.
Okay, let me choose.
I don't like that at all. I don't like that at all.
They look so similar,
I'm
honestly.
gonna go for all. Okay.
Right, go for it.
Oh, it's so sweet.
Oh!
Is that wasabi? Don't cry.
I'm so lucky today.
So, Luize, it looks like you got the lovely sweet strawberry. Unlucky Will. So, on that note, please could you share with us a sweet story of a fundraising journey?
Sure. So the founders who successfully managed to raise equity investment have 3 key things in common. So they have a compelling equity story. They know how to sell their idea. They know where they want to go. They have the vision, and they know what kind of milestones they need to achieve to get there. So that equity financing helps to bridge that gap. And the last thing is the team. So they need to acknowledge what are their strengths and weaknesses, because when investors come in, they can help building that world-class team around the founders, and all of that together is a way to build a successful equity financing round.
We're moving on to pitching now, Will. So, Luize, please could you give us a bit of insight into what investors are looking for in a pitch right now?
Of course. So angels and venture capitalists actually look for very similar things when founders are pitching their business idea. And those are the problem, the solution, the market, and what's the need in the market. What's the urgency, you know? Why now? Why not a year ago? Why not in a year? Why now is the moment for this product? And of course, what's your moat compared to others? You know, there are a lot of competitors. Not always you come up with something extremely unique, but you definitely have like a niche or something that makes your business unique. So defensibility is key, and we spend a lot of time talking about this and trying to get the clarity from founders. Founders should keep in mind one thing. They know their business inside out, you know? They see it as a puzzle. But investors, we are trying to put those pieces together. Investors will ask you a lot of questions because we want to build that puzzle and see that vision that the founders are talking about.
Love that.
We're getting quite close to the end now, right? This is building up. I'm getting excited about the momentum.
So whilst you're doing that, Will, you're getting ready for the next layer of term sheet and negotiation. So, Luize, please could you give us a little bit of insight as to what could I look for as a business owner in a term sheet?
So the term sheet, it is an offer letter when we agree on the terms of the deal.
Yeah.
And the key things to look out for are things like valuation,
Smashed it.
the dilution, how much equity is being sold to investors, right? What are the key terms in terms of liquidation preference? And when I mention the valuation and dilution, something to keep in mind is that typically in each round, the founders are being diluted by approximately 15 to 25%. So one thing to keep in mind is not to sell too much equity too early.
Yeah.
That can cause a lot of issues later on, you know, as you raise further rounds.
As say I was a founder raising now, what could potentially be signs of like a bad deal?
Very good question. So it's definitely the misalignment of vision. So any terms that you as a founder think, no, that doesn't really fit my vision. That's not what I want. That's the key thing. In terms of various terms, you know, liquidation preference. Founder really needs to understand what it means for them and their business. So they definitely should consider going and getting a legal advice on that, just to have the clarity, to have the fundamentals right. That will, believe me, that will help in the next rounds. If that's done early on, then the next rounds will come so much easier.
Okay, now I'm going to take our final step, right, towards completion. Please hold, please.
It will.
Please hold. Thank you for your belief.
Masterpiece.
Thank you for your belief, Amy.
You're doing a great job. Look at it.
I think I might have to ask you to frost this one, just because it's closer to yours. Just a little bit of help there.
Are you sure?
If you wouldn't mind.
Then.
Please fall.
I know, all your hard work. Oh. So then, we're building for after the investment. Luize, please could you give us a little bit of insight into what life looks like after investment?
That's a very good question. And I think that's the most exciting bit for the founders, because they can finally go back to their business and focus on growing it. And what typically investors expect is to have regular updates. So we are talking about monthly or quarterly board meetings and board packs being ready. That's a very nice way how to communicate all the wins and challenges, where you're going and why. And it also gives founders the opportunity to ask for help or for any kind of advice to your investors.
Yeah.
So that's a very good way how to have this communication.
Well, thank you both for your help here. I think we've completed a stunning equity journey. I would be honest, I thought when we had the first one out, it would look a bit of a mess. This is beautiful. This is stunning.
Piece
Thank
of
you.
art.
It's very nice.
At the end of all of our lunches, we ask our guests to leave a tip. Could you possibly give us your single best piece of advice on funding for anybody who's looking to scale today?
Yes, so I think my advice would be, when you are planning on raising an equity, don't lose the momentum. When you start speaking with investors, be ready to pitch, be ready to provide more information and engage in further conversations. That momentum is really important if you want to raise your funding quickly, efficiently, and get it done and continue focusing on your business.
Brilliant. Thank you so much. That is it from us, my friends. If you'd like to find out any more about the topics we've discussed, make sure you head to the Barclays website or hit subscribe so you can stay in the loop as we bring you more working lunches with more wonderful guests. See you next time.